Hello guys, and welcome to my May portfolio update on my dividend portfolio. The feeling of the month is throwing good money after bad. So, start of the month, there was a dip. So I bought the dip, which I thought I was quite pleased with for the first couple of days because it went up quite a bit. Then it dipped down again. And then there was sort of a bit of a flat trade with a few ups and downs. And then there was the second dip of the month, which again I brought. And it went back up. I was quite happy. So, not a great month. The stock market dip is in full swing, I feel now. So, yeah, a bit demotivated, but you know what I say, buy cheap, sell high. I'll keep telling myself that. So then on to my top 10. Been a bit of a change in here. So Horizon's come up in my top 10 because I've been balancing into that one to get that to £1 a month. So the 24 select monthly income fund has dipped down a little bit. A true top 10 of there, Cardinal Health, which I'm happy with, and Meta Platforms. It's been making a massive recovery so far this year. It's one of the positives of the year, so that's made its way to the top 10. Prospect Capital again, I've been balancing into that one quite a bit, so that's why that's in the top 10. And then we're sort of back to almost like the beginning of the year, top 10 ones. So that's what the top 10 looks like. On to the individual reviews, or see how they're doing. So 3M, still in decline. I thought that might have bottomed out, but it's not. It's still going down. Let's just start to show some sort of signs of real recovery. And the dividends looks more back into a pie today, but we'll see how it goes. Yeah, that one's doing okay, doing really well. AGNC, top dividend payer. It's a bit down a little bit. My value shares, so my value pie is doing really well this month, so they're all in good profit. So Google's up there, which is really good. Amazon's made a nice recovery and that's going up, which is another good one. Another positive for this month, Apple's doing really well. Arch Daniel's still doing okay, but on a bit of a decline. I'm expecting that to be red next month. AT&T, I thought I was making a bit of recovery, but the dividend's quite secure, so I'm not worried about that. Automatic data processing. It's still in profit, but hopefully that's the bottom. Aviva, up and down. This insurance, UK insurance is at the moment, but still dividends okay. BAE Systems, so I think that's peaked now. So I've got to sort of make a decision in the next few months whether I want to keep this because it isn't a good dividend paying stock. I think it's like, yeah, just under 3%. So it does pay an alright dividend, but I think it's peaked. So make a decision whether I'm going to keep that or sell it now. Banking sector's taken a bit of a pounding as the sea of red continues. That was on a bit of a downer, but it does pay a really good dividend, so I'm not worried about that one. Oil stocks are really low. BP stopped the buyback shares, so their stock prices took a bit of a hit, but still very positive for me and still really good dividend. Bats, I should have sold out this last year when I was thinking about it. Should have sold out here somewhere. I was thinking about doing it, but I kept it. That's on decline. I do want to exit this one. It's now I've just got to pick my point whether I'll wait for it to come back up or just wait for it to come back up, or I might just move to hold to sell. I don't know, but I do want to exit that one. Cardinal Health doing okay, doing really well. That's why it's in the top 10. Caterpillar on a bit of a decline, but still just in profit. Chevron, yeah, it's still doing okay. It's on a bit of decline. Again, it's another one I'm going to exit from because I've got too many oil stocks, I think. So just choosing the moment when I want to do that, I think. So I'm going to start slimming down this portfolio because I want to make more money. Job, just doing okay. Citigroup, again, another banking sector's having a bit of a bash in. Coca-Cola's down a little bit. Well, I'm expecting that to go up in the next 3 or 4 months. So, again, another keeper. Diageo, I'm disappointed in it. Don't know whether I'm going to keep it. A lot of people rave about it, but it's a bit of a disappointment for me at the moment. It's down. Direct line. Can't wait to sell this one. I just need to cost average it into a profit. So, all being well, soon. Unless, of course, it starts going to reinstate its dividend and start paying to make a dividend, but I can't really see that for the next 12 months. Or while I'm doing this race to 50k sort of thing. So, one of my poorer choices. That might end up going as soon as possible. Ecolabs is down. But it's, I don't know, it might be going back up on the way actually. Emerson Electric Utility still pays a good dividend, but it's down. Franklin Resources, General Dynamics, still in profit but down. Like the War Machine stuff's kind of starting to tail off now. So we've got to see what the future holds for those. Gladstone Land, down. I'm really disappointed in this actually. Did quite a bit of research on it, and when I bought it, it looked like it was going to be an uppy, but it hasn't. It's been downy with poor dividends. Greencoat, this is a very up and down stock, but pays good dividends, so I'm still quite happy with that at the moment. GKS, yeah. Once it split out, did a bit of a split companies out, and then trading where I thought it should be. So I'll just cost average that down. I think it's going to be a keep. Horizon, put quite a bit of money in this the other month to get it to £1 dividend a month, and it's on the up, so really pleased with that at the moment. Illinois Toolworks, again, holding its own. IBM, I'm up on the interest rate, exchange rate, not interest rate on that. Still, it did the split to, I can't remember, what was it, Orion, I think, or something. And it recovered, so still pleased with it. ETF, down. Another one down. Another one down. Way down, that one is actually. Wow. Sainsbury's up, which is good, but it's going to be on a downer. I think it's going to start coming down again in the immediate future. Johnson & Johnson's on a downer. JP Morgan Chase, I think that's going to go on a downer. I think it's going to have a downward trend for the next 3 or 4 months. Kimberly Clark on a downward trend. Legal & General, UK insurance stuff's always on a bit of a downer this year. Lowe's is doing okay. I don't mind sort of sideways trading really. In terms of this, I like to see it go up, but I'd rather see it sideways than down. LTC Properties, I've been putting some money into this one to get. Obviously, I want to get this one to £1 a month, and it's on a bit of a downer, so it's a good time to buy. So I'm okay with that. And the same with Main Street Capital. I'm now sort of putting into this, get this £1 a month. It's been on a bit of an up. It's had a little bit of a down, but I think it's going to start going up because I want to invest money in it. Always the way for me. A bit unlucky that way. McDonald's, it's going to start showing a sort of bit of a downward trend, but still doing okay. Metronics, down. Yeah, Meta. What a year that's having. What a year that's having. When I thought I was going to be losing loads of money, and it's steadily climbed up nicely, so very pleased with that. Microsoft, again, another one on the up and up. So really happy with that. National Grid, this is sort of a fairly steady stock. A good payer. It's one of my dad's favourites as well. So, yeah, happy with that one. Nucor. I really ought to sell it. But it's one of them stocks that just, every time I think about selling it, it surprises me. So keep that one going. Penning Group, not really recovered yet from, it did a return of assets a couple of years ago, and it's not sort of recovered fully yet in terms of share price and more my investment value. So still good dividend, still keep cost averaging that one. Pepsi's doing okay, but showing a downward trend. A few more of my ETFs, not doing great. And that one doesn't really do great anyway in terms of share price, but dividend's okay. This one normally does really well with share price and dividend's okay. It's had a bit of a downward spike at the minute, but that is the story at the moment of stock markets. Fiji, it's on a bit of a downer. Procter and Gamble, it's on a downward trend. There's a theme here, isn't there? Everything's on a bit of a downer, but you can't win at everything. You can't be in profit all the time. So some of these are starting to look like real bargains. I should put more money into them. Some of them look like a real loss. I think I should have sold them off. But generally, like Rio Tinto is starting to look like a bargain now. Rolls Royce, another one of my value pie, doing well. Had a nice pick up at the right beginning of the year, and then it's sort of holding between £1.40 and £1.50 a share. So again, I'll tip this one's going to be, hopefully, before this end of these 5 years are up, that's going to be £5 a share. That's my plan for that one. Anyway, see if reality comes in. Roper doing okay. Banking showing the same size, down. Sergo, just can't wait to get rid of it. I know a lot of people rave about this one, but don't like it. Can't wait to get rid of it. Severn Trent, doing okay. Shell, it's down a bit, but I'm still up quite a bit because again I bought this back in the pandemic, and I sort of kept it because I do like Shell. Shell's one of my favourite oil stocks, I suppose, energy stocks in that respect. So I'm well up on it, well up. Even though it's showing a bit of downward trend. Sherwin, it's trading sideways a little bit. Stag's made a bit of recovery, which is good, because that, not last year, before was my best one, then last year it was one of my worst ones. This year it's coming back up, so that's really good. And Starbucks, that had a bit of a downward trend last year, and now that's picked up nicely, so I'm very happy with that. Cisco's showing downward. Row price might start going up, that one. Tesco's, yeah, it's just start to show its downward trend. Doing okay. Tesla, it's only one of my value pie that's in the red, but that might change by the end of the day. Nearly there, look. So this one, my risky investment, but it just pays a mega dividend. That's why I brought it. Had a nice little trend up for a little bit, and it's fell off quite a bit. It's cheap at 70 pence a share, and the dividend's like 10% or 8%, something like that. Yeah, 9%. There you go. It pays out, but basically it didn't cost me a lot to get to £1 a month, so that's why I quite like that one. But it's very risky. Unilever, it's on a downward trend. And United Utilities, which I think is going to start, they've just announced some stuff, I can't remember who it was now, but they're going to maintain the dividend, I think. And there's some good, they've made a bit of a loss, but they maintained the dividend, but I think it's got a good outlook, so that's doing okay. I actually stuck an extra £5 in that one this month. ETFs, FTSE's down, all world high dividend yield down, emerging markets down, S&P 500. Oh, it's going up. Shows last time I looked at that one. UK gilt down. Corporate, the European one, it's just in profit. And then the one I brought by mistake, it's got the same ticker symbol when I was reorganising my pies. The UK one, which is done in pounds, still down, but I don't know, I might sell that out, all that one, and put in that one, I don't know. VIC Properties doing okay. Vornado doing badly. Want to get rid of it. Don't know what to do because it's dropping like a stone. Walmart showing a bit of a downward trend, but still doing okay. White Stones down a bit as well. WW Granger doing really okay. So there's Smiler sort of how my shares are looking at this month. If you're following along, so you can see for yourself. A lot of red, not enough green. Good money after bad. That's what it feels like this month. Anyway, over to the dividends I got this month. So AGNC, I got £1.15 this month, which is where I want it to be, above £1. Apple paid out 14 pence, so I'm up a penny, but I have invested, so that should see that trend going up. AT&T up again. So I say I like that one. I fell out of it, now I'm falling back in with it. Aviva, paid my first dividend Aviva, or interim dividend, £2.50, so that was really good. Banking sector, got £1 from that one, doing okay. British Tobacco, £1.63. It does pay a good dividend, but I just want to exit from it. I think it's not a long termer. Caterpillar maintained the dividend, 48 pence, so up 2 pence from previous investment period. Citigroup paid out today, actually. Well, paid out the other day. I got it today, 47 pence. Gladstone Land, slow and steady. Painful. I think it does need to go. I just need to bite the bullet. Greencoat, as I said before, like really good dividend. That's almost doubled from the last quarter. Well, I haven't doubled my holdings, so well, I might have done actually, but yeah, doing okay. Really good, 62 pence. So I'm starting to get close to start seeing pounds and everything. Horizon, so that's given me 70 pence this month. So next month, if I've got the ex-dividend date right, I should be on £1, which is really good. JP Morgan and Chase, 62 pence. Like I say, it's having a bit of trouble at the moment, but so is all banking sectors. Lowe's did me okay at 39 pence. Nice little grower there. LTC Properties. I don't think I'm going to get this one to £1 for the end of the year. It needs quite a bit of money into it, and I'm not quite prepared to stick all my money in it. Yeah, but it's doing okay at 45 pence. So I've only just started balancing into that one anyway, so that should start jumping up quite quickly over the coming months. Same with Main Street, it just started to dump a little extra money in them. But 33 pence. New Court, great dividend grower, great shout out to those. Just for them, it just makes me smile. I think it was a lucky pick. I think I had that as a lucky pick, and it's done me well so far. METF monthly, say 56 pence from the first one, 54 pence from the second one. So steady income from that. Procter & Gamble paying me 55 pence, which is okay. Like I say, Prospect Capital, I've been sort of ploughing a bit of money in that to get that to £1 a month. That's now hitting £1 a month, which is really good. It's going to help my dividend income to help me reinvest and grow. And then we've got Reality Income, nice steady monthly income on there. Doing really okay from that. Reckitt and Baxter, £1.70. So that does me really well for a year for what it is. Royal Bank calendar, got 89 pence this time round, and I got my 72 measly pence from Sergo. Give me a grand total since I've owned it of £1.10 in dividend, and a loss of about 30% on the share price. Not that I'm bitter, but you win some, you lose some. Stags paid out at 31p. So like I said, that could be another star stock this year. Could come back into the top 10. Starbucks got my 45 pence. That's doing quite okay at the moment. I'd say Cisco's on a bit of a downer, but the dividend's still okay at 51 pence. 24 monthly select fund. My first £1 a month dividend from that. So I've only had 4 dividends from that. but it was cheap. I did put 200 quid into it to get it to £1, but it's really, well, I like the dividend yield from it. Let's see how it goes. Will it be a winner? Will it be pay off in the long term, or will I just chase that dividend and lose money, lose my capital? Who knows? And White Stain paid about 90p, giving me a grand total of £20.77. So on the ISA, so I had £209, £19. So £200, well, it's £419. So £400 of that was from cash from my account. So I did the 200 that I said I was going to do this year, plus I had this £1,000 that I was going to invest, and £200 from that. So I've still got £600 of that left. And there was £19.54 dividends from something, from one of my other outside this portfolio, one of my little ones that I'm just transferring in here. Anyway, but that was that. So I invested like 420 quid. So I would have got £25.51 in interest, and my dividend was £20.77, so a little bit of a loss on there. But interest rates are quite high this year. Anybody who's got a mortgage will know that. So that would give me a balance of £7,679. So what am I currently at? Currently at 8,400. So I'm still up, still beating the ISA, but losing money this year. It's where this ISA could win out this year. But hopefully over the balance of the 5 years I will beat it. So yeah, say total money invested is 7,800. That includes dividend, by the way. For people who don't think numbers match up, that includes the dividend and reinvestment. My return on investment before reinvesting dividend this year, I'm down 11 or nearly 12%, and if you include dividend, yeah, still down 11%. It's not great, but overall, my dividend return on investment, including dividend, is 7.55%. So I'm still up. Not the dizzy heights that I was beginning of the year of around 10%, but still there. That's just really a nothing one. That's just sort of how much money I've put in this year versus how much dividends got back. Not really many things just for me. So I'm currently at £93.67 dividend this year, giving me a dividend yield of 3.82%. So I'm hoping, I really do hope that come mid-term, so end of next month, end of June, that's going to be 4%, but we'll have to wait and see. I've had 300 quid dividends so far back, all in, and my capital growth this year, I'm down £231. That's a whole month. Wow, that's a big loss at the moment. I'm running at a loss this year, but as expected. But overall, I'm still up nearly 600 quid. So let's have a look at the charts for the year. So I'm sort of currently holding around the £20 a month mark, and to meet my target of £300 in dividends, I need to average about £25–26 a month. So I'm not quite there yet, but it's good to see that it's holding around the £20 a month mark, which is good. On to individual companies. Number 1 is still BP. Number 2 is Shell. Number 3 is AGNC Investments. Number 4 is Penning Group. And number 5 is Prospect Capital in terms of that. So I've got starting to see some runaways here, and the different growth companies are still down here. So it's good to see that sort of chart. I don't really mean too much, just shows the sort of returns I'm getting with the small amounts I put in each company. And I'm at the stage where I think if I slim down my portfolio a little bit and try and get it down to 50 companies, I can grow the dividends quicker. That's sort of the conclusion I'm coming to at the moment. Okay, onto my little front sheet that I have. This chart sort of really just visualises it. So these are my dividends returns each month, actual, and this is a trend line. So above is good, below is not so good. So last month was above, this month's just below, but still going in the right direction, up. So on to my predictor. Will I make my 50k in 5 years? No. That's currently sitting at 15,000, nearly 16,000. And these are my targets for the year, and I think I'm off by loads. I thought getting this to 10,000 this year would be quite easy, considering I was going to put £200 a month in, which gives you 2,400, plus some other bits I was going to chuck in. That would have made that, but we'll see. So where's 50k looking like? 13 years still? Yeah, 13 years. So I think the best I've been at so far was around 10, which hasn't changed. So anyway, so that's this month's portfolio review. I think they're doing the free shares again now. So have a quick check, get a free share. Yeah. So if you want to get into investing, if it's inspiring you a little bit, or you want to give it a play as well, and you want to start a Train 2 and 2 account, then my code, does it give you a code? I don't give you a code anymore. Copy the link. I'll put the link in the video description. If you sign up using that link, then you'll get a free share and I'll get a free share. And any free shares I'll get, I'll sell at the end of each year and donate to charity. All right. Thanks guys. See you next time.